Hi, podcast listeners. Brittany and Marie here with 4.5 and the Property Management Show. Today we had a really cool guest. We talked with Shawn Johnson of Independence Capital Property Management. He's an investor, a property manager, all-around great guy.
And he actually shared with us a lot of golden nuggets that property managers can implement to work better with investor clients.
Yeah, if you're interested in that, stick around and listen to our podcast. Thank you again for joining us, Shawn. Obviously, we talked a little bit before this, but we're really excited to have you here. Obviously, we've known each other for almost 4 years, Shawn. Did you know that? That's
well
almost
done.
how old I am.
You should pick better friends.
You take what you can get. But today, we want to talk to you a little bit about something that I know you're really passionate about. Should I start again?
Yeah, we can.
Well, you're like playing with it. So today we want to talk to you about something I know you're really passionate about because we've talked a lot about it in the past. Just about investing and the property management relationship versus the investor experience and how those two kind of come together. But before we get into that, you've been on the podcast before, but you were on the podcast with Kristen, and you guys probably talked a little bit about yourself before. I want to hear more just about you and how you got into real estate investing. Obviously, you've been doing it for a really long time, which is crazy. So
I'm not that old.
I mean, 97.
You started when you were 2.
Yeah. Well, no, I know. Well, we were looking at it, and I didn't even know this, but somewhere, I think it was on your bio on your website, said that you started real estate investing in like 2002 or 2003. And I'm like, no, there's no way that that's accurate. Shawn is like 3 years older than me. That makes no sense.
I was 20. Yeah.
Yeah. That's crazy.
Yeah. So that's kind of the gig. I bought a house when I was 20 years old, lived in Phoenix, Arizona. And by just pretty much pure luck, the market was taking off, and I was able to sell that house. I kept it 2 years because I didn't want to pay capital gains. So it was my primary residence, and kept it 2 years, sold it, and it netted $65,000 in profit. So that was kind of what got me in the bug of real estate. And so I made this like big goal. I thought, you know what, by the time I'm 27, I want to own 3 cash flowing rental properties. Well, 27 came and went, and it didn't happen. And I was super disappointed. But at the time, I was in a live-in flip. Now, Chris and I were remodeling a house, and the intent was to buy it and do a live-in flip and sell it. And we broke even on the stupid thing. Like, it didn't even make us any money. You know?
Oh, gosh.
Just like a $2,000 or something after we.
Was it because you just didn't have the experience yet, and you were just like throwing money at it, or it just?
No, I think what happened is the market turned. So this was like in 2008, and so we bought it as a HUD foreclosure home, but yeah, it just did not appreciate like we expected it to. After we put about $25,000 into it in a remodel, and I did all the work, but yeah, so I was a little disappointed. That sucks. So I started getting into rental properties at that point, and most of that's been through the property management company, and how easy it can be to get into that because of property management. So it's kind of my passion. Like, I really enjoy spending time with other investors and talking to them how they can increase their portfolios and think of different, more creative ways to invest. So that's, a little bit about me. I was working a full-time job through all that. And I owned a full-service car wash at the time too, totally unrelated to property management. So,
wow. I didn't know that.
Full-time job and a car wash. So yeah, Chris.
So I can bring my car to you, and you.
Yeah, you could have. I sold that. Yeah.
But what if I drive to you right now?
Sure, we'll wash it.
Sounds like, go away.
But what were you thinking? Like, at 20 years old, you had a full-service car wash, and you just decided, hey, I'm just going to buy a house because I want to start investing? What was going through your mind?
Yeah, so at 20, I actually was a little older when I bought the car wash. So 20 when I bought the house, first house, that was just a guess a live and flip. And then I think I was 26 when Chris and I bought the car wash. It did cripple my hopes for the 3 cash flowing rental properties by the time I was 27. So, but anyway, yeah, we sold that, and yeah, that was kind of how it began. I guess the entrepreneurial bug was in, and wanted to make things happen at a young age. So,
do you think that's pretty common? I feel like, I don't know how often I hear this, but I feel like when I do hear that, it kind of sticks to me. So it makes me think it happens more commonly than it does. But do you feel like a lot of the investor friends you have or investor clients that you work with get started young, or is that not very common?
I would say most young, but there are those exceptions that, have worked a W-2 job, retire, and then they're like, what do? I need to figure something else out, so I would say probably more common as a young age, but
yeah,
I don't know why.
Yeah.
It's the old question, is it born, or are you born as an entrepreneur or bred as one? Mix of both, maybe. I don't know,
So when you were 20, bought your first house, and you started acquiring more properties, did you at one point or another try to manage the properties yourselves when you started treating them as rental properties?
Yeah, so right up my first few rental properties, yes, managing them myself, Kristen and I. And once we brought on staff and a team to manage the property management company, I was like, no, I'm not going to manage these myself. And it takes the emotions out. I've never really been an emotional person towards intrinsic things like that. So there's no emotional attachment to any of our properties, but there is an emotional attachment to make them cash flow and to, perform. And so, yeah, all of our property managers manage our portfolio. I have rental properties in Indianapolis, Indiana too. And I have a management company that manages those. So I want nothing to do with the management side, because I feel like being objective and having a different, maybe perspective on the property itself, makes them perform better. And what kind of hypocrite would I be if I was managing my own and I own a management company, right? I need to utilize the tools that I have in place, is how I feel. So.
But before you had the property management company established, were you considering, or did you try to manage your own and then decided hey, we need people?
No, actually, no. So yeah, the first rental property that I purchased, we had already had the property management company. Mm-hmm. And so we probably only had 30 properties under management at the time. And I was still working a full-time job. I had a really cool schedule. I'd work 7 days on, 7 days off. And so it afforded me the time to really look at investing and to build the property management company on my off time. So, so really, no, I've never really managed, I never bought an investment property to manage the property. It's always, incidental to the business, I guess.
Well, so then at what point did you decide to start a property management company? Was it after you owned a bunch and you were like, oh, I think I could do this. This would be a good investment. What was that thought process?
No. So yeah, Kristen's thought was she's the one that really came up with the thought to start a property management company in our local town. It's not very big. And we didn't feel like there was a good solution for property management. And so, yeah, she started the process to get that going. Again, I was working full time. So my focus was not really wanting to be a property manager. But I certainly wanted to succeed at it if we did do it, and we did do it, and it's been good. So, but yeah, I definitely didn't start probably the typical way. I invested in properties, I started managing them, I started a management company. That's not how we did it. We did it the opposite. So
yeah. And so, do you think that being an investor yourself shapes the way you run the property management company at all?
Yeah, I would say so. Our local market, a large portion of our portfolio is accidental landlords, or they didn't have the intent to buy a rental property, and So a lot of our processes here are catered towards that client. But yeah, I would say like where we are very strong on the investor side of that is that we take the leasing approach. What's an investor want? They want three things. They want the fastest tenant. They want the best tenant. They want it for the highest rent, right? Those are the three big things. And so like we've shaped our entire leasing process on that. Like, how do we get a good tenant fast, and how do we get the most amount of money? And that's kind of our perspective on how to really maximize our investors' gains. That's big for me. I want my house rented, and I want it rented for long term, and I want the best tenant to be there. So, yeah.
And then, so with your investor clientele, are they, because of the way that you guys run the management company and like the main factors that you go after, are these people coming to you saying, I want to buy more property? Are they seeking you out, or is that just a pre-established relationship when they start working with you?
Yeah, so that's actually been a shift that we've made in the business in the last couple of years, to position ourselves as investor-minded property managers. So at first, no, that was not really the case at all. It was always, in the conversation of bringing on a new client, like, yeah, we invest in property too. We own rental properties, so we get it, but it was never like outward facing. And, hey, community, we're investors just like you are. We look at it the same way you do, in the same prism. So that's been a shift for us, and that's really helped. So yeah, now we have our current clients asking, hey, I would like to leverage my current property and buy more rental properties, or, I have a 401k. I'd like to shift into a self-directed IRA and build their portfolios, and we help them do that. But that's a recent shift for us.
Has that made your life a little bit easier? Because you're obviously growing with a current clientele instead of bringing on new clients to work with.
Yeah, I think so. I think it's been really helpful. One thing that kind of unexpectedly happened is that when we launched that service, we actually had quite a few of our current investors say, you know what, I've been thinking about selling my house. And so we launched a pocket listing program from that. And we have a lot more homes than I ever would have thought would have been in that. But what I would say to like everybody that is a property manager, shift your mindset to be an investor. And whenever your client comes to you and says, you know what, I'd like to sell my home, then you think to yourself, how can I buy this house? You know what I mean? Like, don't put it on the open market yet until you've evaluated if this fits your portfolio. And that's how we've acquired most of our properties. And so many times it's just super favorable terms. We had a client of ours. He owned 2 single family homes on the same lot, really nice houses, newer builds, and just did not like being a landlord. And so he's like, I'd like to sell them. We're like, wait a minute, let's see if this works for us. Yeah. And we got it pretty discounted. He offered a 0% owner financing for 2 years until we refied it out. And I think we put a $30,000 down payment on it. But to pick up 2 houses that were valued about $350,000 to have a 0% for 2 years, that's pretty cool. And they cash flow great. So just to ask those questions are probably not in the forefront of most investors or landlords to even think, you know what, I could sell this like that. And they don't want it anymore. Huh. Oftentimes they're just stressed out with the maintenance or whatever the case may be and just don't have the stomach for it. So if you can ask those questions, you have a really big opportunity.
Yeah, that's crazy. I mean, what do you think that that's not something that a lot of property managers think about when owners come to them?
I don't. I really don't. I think this industry, real estate in general, produces people that are very short-sighted, and they don't look at the long term, especially in the investing world. Like, it's a sales market, right? I'm working for that 3% commission or whatever commission, and I want, $5,000 to $10,000 out of it. Instead of, if I took that $5,000 to $10,000 and bought a rental property, that $5,000 to $10,000 will turn into $300,000 in time. Mm-hmm. but they don't think of it that way. It's like, it's kind of society in a hole right now. So yeah, I don't think in general property managers are looking at it that way. And that's how I look at everything. Like,
Yeah. Well, which is kind of interesting because a property manager's, well, not all, like you said, but the job is to help people with their investments. So what's the best way to do that is to understand investing as well as you can yourself. And that, like, personally for me, that would make me feel so much more comfortable working with a property management company, just knowing that, hey, they're doing it. They are going to give me the best advice because they would do it themselves.
mm-hmm. Yeah. There's a lot of property managers that don't own rental property, and it blows my mind.
Do you think it's because they don't do real estate? Like, because so something you mentioned is, you get the whatever commission from selling a home, take that money, reinvest it back into a down payment or something for a home that you can invest in. Is it because some of these companies are only doing property management and maybe they're not at a point where their cash flow is allows them to do that? Is that something that could be a factor?
Whew, I don't know, but if their excuse is to not have the cash flow, I've bought so many houses with zero money, and so that's not a legitimate excuse in my opinion.
Yeah.
So, to me, like, the excuse is they think that's just a problem, not having the money. Maybe it's a lack of understanding of really what it takes to cash flow a property. I don't know, but that scares me, right? If you have a property manager and they don't have the knowledge to make a home cash flow, there's a little bit of a red flag there. So
yeah,
I don't know what it is. I think it's a mindset problem.
Yeah.
Or a priority problem. You know what I mean? I would rather have a nice car than a cash flowing property. I don't know.
And I think that's absolutely true. It all depends on what the property manager is after. Like, if you own a property management company, you have unique goals, right? Because you started it for a certain, to get to a certain goal. And then if you're planning to grow it, I think the key here is, here's a solution to keep growing your company without necessarily, working harder. You can kind of work smarter. So I think the lesson is, hey, there are options out there. You can reach out to your fellow property managers who have probably done the same thing. And so, do you feel like there are certain misconceptions that property managers have about, like, investing, that you could maybe share and debunk?
Yeah, probably the biggest one is that you need a bunch of money. And it does take money. Don't get me wrong. Like, you could buy houses with zero down. You certainly need enough money if, the furnace went out tomorrow to take care of your tenant, right? You need a safe and functioning home. So I think that's probably the biggest thing. The other one is maybe like, maybe the misconception is like there's not generational wealth involved with it, or they don't understand the general rules of compounding interest, or just not thinking through it. Because I think most people probably never put pen to paper and really done the numbers on how well rental properties can perform over time, and cash flow. Like, okay, if I have $10,000 today, I'm going to convert that to only $300 a month in cash flow. Well, that doesn't sound very good on the surface. But if you look at $300 in cash flow every month for the next 40 years, that's a massive amount of money. And that's not money. And that's not even talking about appreciation of the property.
Yeah.
So
which is crazy, because 40 years, how much is a 800 square foot home going to be worth?
Yeah. Well, in San Francisco.
Very true.
Yeah, that's the thing is like, and you're having a tenant pay your mortgage off. So essentially you won't have any debt on a property, or if you even continue to leverage it, that money that you've used to leverage that property can be used to buy more rental properties and compound it even quicker. Yeah. People just I don't know. I mean, I'm not saying that's what's right or wrong. You do what's, best for you. But I just think that some people are missing some really nice opportunities to create generational wealth, not just now.
Yeah.
And so to go back to talking about like what goes on in the back of the heads of investors like you to sort of help other property managers out there understand sort of why they do things a certain way, so on and so forth. Do you think there are misconceptions that property managers have about investor clients and vice versa, right? Do you think investor clients out there have misconceptions about property management companies?
Well, I do think, and I've caught myself in this, like you get in a trap where you think investors just have money, and when the furnace comes out, you need to just make it happen, right? But life still happens to them too. You know what I mean? Like we've had some investors that like they get compounded with problems, maybe their personal life, a death, or a spousal divorce or something, and then the furnace goes out and they don't have the money for it. So they're not trying to be bad landlords. They just have some tough situations. So like I would always recommend, I always tell all of my investors that are getting into this to take at least the first year or two of all cash flow and put it into an account and don't touch it. Build it to $4,000 or $5,000 and just don't touch it. That's a good capital expenditure account, and just be prepared when something happens. And more than likely something will happen before that 2-year mark. So I think that's a big misconception property managers have of investors. Investors' misconceptions of property managers, I think probably the biggest one is that all property managers are the same and they all just collect the rent, right? That is so not true. There are just a huge gamut of property managers or types of property managers out there. And also think that, they just want to take the money and they don't care about my property. That's also just a huge misconception. In our business, we're stacking nickels to make a dollar. Even if you're fee maximized like our company is, it takes a lot of properties to turn a profit in this business, and it can be done very effectively. But I think that's just a huge misconception. And in general, I think our society, we're just a do-it-yourself, DIY type of society.
Right.
And investors, I think if they really understand the value that property management companies provide, can compound their investing abilities if leveraged properly. Use a good property manager. I wouldn't go write up a 13-page contract and not use an attorney to do that. Mm-hmm. Right. And I also wouldn't manage properties without using a good property manager. Like I use other companies to manage my own portfolio. So,
right. You're not doing any type of absentee management.
No, I can imagine trying to manage a property from 5 states away. Yeah. That just blows my mind. Or even in the same county, because I wouldn't be privy to the same resources as a property manager. The 4.5s of the world, the Appfolios of the world, you know what I mean? Like they just don't have the same resources, whether it's right or wrong. But it's a volume thing though. If one landlord's managing one property, they're probably not going to have a lot of issues. So the stress isn't high, but when they get into 3 or 4 or 5 or whatever, that's when it starts to break down, and, finding good help is extremely important.
Is that usually when kind of the investor types come to you instead of the accidental type, is when they have like 3, 4, 5 properties? They're kind of like, oh man.
Yeah, I would say under 10 is at their max.
Yeah.
It becomes really difficult to manage if you're continuing a W-2 job any more than 4 or 5 properties.
I couldn't imagine. Like I could not imagine even managing a property right now if I owned it. That sounds like, and obviously we work with property managers all the time, so our mindset is a little bit different than your average person.
Yeah, one of our podcast guests even said, owning a rental property is like having a child. So if you manage it yourself and you have a full-time job and you have 3 kids, good luck.
I can't even take care of my cat. So it's like, no, hire somebody. But on the flip side of that, if you have accidental landlords, are you able to encourage them down the line to invest in more properties? Maybe not in Farmington, maybe in like Albuquerque, or like expand their portfolio. What's like the secret secret sauce to kind of encourage them and push them in the right direction?
Inception.
Inception them.
Yeah, I say so. I think it starts with their first property, and if that first property is actually cash flowing for them, as to the success of being able to get them over the threshold. If they're upside down in the first property, they have a hard time seeing the benefits of owning rental property. Although I have helped a few investors, now investors, they were accidental landlords at the time, to buy more property, even though their first one wasn't a performer. And I've helped other guys that have never, just complete virgins to the investment world, invest in other states. And our market wasn't the best for what their current goals, and so we helped them buy in Kansas. And it's once they get the taste of actual cash flow, I think is kind of how you could get them to continue. But if their first property is not cash flowing, it's tough.
Yeah.
It's really tough.
Yeah. Would that just be like, so you said upside down, would that just be it's just a horrible property and they can't really make any money off of it? A lot of repairs that need to happen. Maybe it was their parents' house that like hadn't been touched since the 50s or something. Is that kind of the typical situation that you can't really overcome?
Yeah, that's probably a common one. I think even more common though is the expenses of the properties are more than the rent can be generated. So, the market is the market. We only get to play in it. We don't get to dictate it. And so like you get a lot of newbies or maybe reluctant landlords to say, you know what, my mortgage is $1,300 and my taxes are this amount and I have to pay insurance and all that stuff. So I need to get $1,800 a month. That's not how life works. The market, the tenant pool dictates what that house's rent should be. So it may only rent for, $1,500, although your expenses are $1,800. So, you get that a lot. I need to get higher rent because your management fee is X. Well, that's irrelevant, Yeah. So yeah, that's what I mean by upside down on a monthly basis, really is non-cash flowing.
And so, we heard a lot about certain pushbacks that you get from, real estate investors. So maybe they don't understand what property management is. They think you just collect rent, or, they demand a certain rent amount to cover their expenses. Like, what are the other common pushbacks you get specifically from investors? And what is your go-to response that works every time?
Oh man, go-to response. We've got a playbook for that.
You have a Jeremy Pound playbook?
Yeah, we do have a Jeremy Pound playbook, and that guy is amazing.
We're working with him too.
Yeah. He's been working really closely with Marie and Logan, redoing our sales process.
Nice.
Logan's like loving it so far because he's like, man, like there are all of these objections that I know the answer to, but my words just weren't
efficient in getting the point across.
Yeah. So it's like, but we're essentially working with him so we can have a better understanding of how it works, so we could recommend it to our clients, because it makes our life a lot easier if people are actually closing business. Yeah.
So I've been involved with some of that. I don't do our new client bring on stuff like our BDM does, but probably the biggest thing is I just need you to collect the rent and find a tenant, you know what I mean, and manage that. And that's a pushback. I would say, we have so many other processes in place are there to protect your asset. And so we want to maintain two things here. We want to make sure that we are maximizing your long-term returns for your property, and we want to minimize the risks involved in owning a rental property. Those are our two main objectives. And if we can maintain, if we could satisfy those, you're going to be very successful at this. So like typically, like I need rent and, that's all I want, and make sure the tenant's taking care of the house. That's only a small portion of what we have to do as a property manager. So that's kind of my typical feedback to those.
Well, to it. Yeah. And it's like, I guess you can't really say this to an investor, but it also, if they want you to just do that, that's not in your best interest either, because then the tenant's going to think that you're doing full service management for the property. The landlord's going to do something wrong and you're going to get blamed on social media or Google or
Sure.
whatever.
Yeah, we turn into that slumlord or something,
I guess you can't say that to them though. Well, actually, if you just want full rent or rent collection and us to check in on it, that's bad for us. So no.
Yeah.
Maybe you should do that actually.
Yeah, it's probably a method of persuasion there.
Yeah. Reverse psychology.
Yeah, exactly. I like it.
And so what other types of pushbacks do you get that you have like a playbook answer to that you'd like to share?
Oh my gosh. Yeah. So probably the biggest one is we have protection programs, rent loss and property protection and eviction protection. And although that's probably most geared towards more of a reluctant landlord that doesn't prepare for those bad situations sometimes, a pushback from our investor-minded folks, it does occur. And so what I would say is, look, we're minimizing the blow for you. You don't have to worry about if that tenant does lose their jobs. And so often, and I did a study in our applications. I took all the applications that we've ever screened and looked at which ones have actually filed for eviction, those tenants. There's no relation that we found in our portfolio based off a credit score. None. We had tenants that had 780 credit scores filing for eviction because they lost their job. Life happened. Yeah. They're not intentionally bad tenants. Yeah. Life happened. And in our market, we had some serious job loss a few years ago. Right. And it was a really good thing to look at. So I would tell them, look, it doesn't matter if we have the most ideal tenant on the planet, life can still happen. They can get cancer tomorrow. And so we have these protection programs in place to help soften the blow. We'll pay 30 days worth of rent for you. Who else nobody else in our market does that. So, it may be cheaper to go somewhere else, but it is more expensive to go there too.
But it's about, yeah, exactly. It's about value. And it's also about security. It's like not having insurance on your home almost.
Right.
It's like life happens, something's going to happen. And if you don't have that security, it's going to cost you a lot more. Yeah. That's a really good way to put it. Mm-hmm. So you guys now include that in all of your packages, huh? Or do you have a tier that doesn't have that?
Yeah, our lower two tiers would be, you'd have to pay additional for that. Our top tier, it's included. Yeah.
Do most people sign up for your top tier?
It's designed that way. And I know, there's an argument to be made there. Like, you're supposed to, get people to take the middle tier.
You can get people to take the top tier.
It's actually better.
Yeah.
We've been good with the top tier has been really the draw. You know what I mean? There's just a lot of value in it, and it is substantially more expensive on the front end than our competitors. So it's better for us to, pack it full of value, in our opinion. So I don't know. I like it.
Yeah.
And I think the important thing to note here is it's not just the packaging that's working for you. I feel like a lot of credit goes to how you guys are presenting the packages and how you're explaining the benefit versus just, yep, we do this, we do maintenance, we do tenant screening, right? It sounded a lot like when you get a pushback from an investor, you tie it into what's in it for them. And I think that's super valuable.
And you can speak to it honestly because you're an investor. You're like, this is what it means to me.
Yeah, exactly. I couldn't have said it better.
So what would you say to people out there who might have this fear that, hey, if I am a property management company owner, I have my own properties being managed by my team, what if there's conflict of interest? Like, what would you say to people who have those thoughts?
Yeah, so we look at it as there's a degree of separation. So we manage, my team manages our properties, but manages for our clients. And anytime I've never seen it, but if I was to see any bias towards our properties, I would really get upset because that's not That's not who we are. We want them to treat every client equally, you know what I mean, and not give a preference. So what I would say to that is like, look towards dedicated property managers more than those that are managing their own properties, because that's important, right? You don't want a sales agent at the closing table about to make $10,000 and your property's water heater goes out and is flooding your house for them to ignore the phone call, right? Because what's more important to them now is $10,000, not your flooding house. So what's more important is to have a dedicated property manager, not one that's meddling in it. Don't meddle in this business. It's too risky, take it full time and take it serious is what I would say to an investor that kicked back on that. And I don't know that I've actually ever had that issue. Usually when investors say, you know what, you guys own your own properties. Yeah, we do own our own properties. My team manages them. That's a good thing for them. They feel warm and fuzzy about it. So
yeah, it's almost like validating how much you trust them. You're like, no, I'm not going to use another property management company in the area because we're the best and you guys do the best job.
Yeah.
Yeah.
It would be weird to call my competitor and say, hey, can you manage my own properties and I don't use my own company?
Yeah.
I don't believe my own processes. So,
And there is such a thing as over managing too. So it's like, if your team was just focused on your properties, I feel like the tenants would be like, what's happening? Why are these people checking up on the property all the time? I don't know. There are a bunch of things that could go wrong. So it's like all of those things.
Sure. Yeah. Overmanagement is a real thing.
Yeah.
And so is it part of like your training or your processes that obviously your people will know that, these properties are owned by the owners, and it's sometimes subconscious, like, I kind of want to take care of it. 'Cause it's kind of like, it's like ours.
Yeah, if I mess up,
like it's more personal because I know the guy. It's not like this investor client. It's like my boss. And so how do you protect against that and instill the thought that, no, I mean it when I say treat my property like any other property in the portfolio?
Yeah, I think it's just setting the expectations at first. I don't know if there's a process that can be put into that, but it's certainly an expectation. Look, don't treat it different. As a matter of fact, if my water heater goes out at 2:00 in the morning, I want you to treat it the same as any other, you know what I mean? It's important. So yeah, just setting the expectation up front is big, and it's been good for us. So like we have employees that own their own rental properties too. And we make a rule, like you don't get to manage your own under our umbrella.
That's smart.
You will use another property manager to do this because I don't want the bias in our office. So
I think that's a really great rule.
Yeah.
I mean, in hindsight, it sounds like, of course do that. But when you're so busy dealing with the day-to-day, you're like, hey, I just bought this property. And you're just like, I don't want to hassle my colleague property manager with my property because I know it needs XYZ. I'll handle it. And you think you're helping the team. But what you're saying is maybe you're not helping the team because then you're introducing these gaps in your laid out process of no conflict of interest.
Yep, exactly.
Do your employees pay the same for property management services? Do they get a discount?
So we give it at cost. It's at cost.
Okay, that's really cool. Yeah. So, sorry, I don't know. TMI, I can cut it out. I was just curious.
Yeah, so like to take that to the next level, we're really focusing on launching a program in the office for maybe those employees that don't have really any money or a lot of money set aside, where they can put some money set aside instead of like in a simple or 401k, that we then pull that money together and buy properties with it. And so, yeah, that we talked about that yesterday at our level 10 meeting and seemed like a huge hit. So we're hoping hoping to launch that. I want to build wealth for other people. And I think that's a really good way to do it. So
that's so cool. And that's such a cool incentive, like for your employees too, to make them feel important. We talked to Melissa Prandy a while back about ways to incentivize your employees outside of just like money. Mm-hmm. And I think obviously that turns into money, but that's something that they wouldn't necessarily, some of them maybe, but they wouldn't necessarily go out and do on their own or think of doing. That's awesome. I really, really like that.
Well, and I think it shifts their mindset too. Think about like if 5 of us pulled our money together and then we bought a house and then 6 months later we have a large capital expenditure. Well, they're going to look at it as, oh crap, that's my money. And now we have to make the decision based off of that instead of managing properties for others and it's not my money.
Yeah.
You know what I mean? It still needs to get done, but it's not my money. So it shifts that mindset, I think, is investors.
Really cool.
Yeah.
So do you have any advice to property managers out there who may be interested in dipping their toe into investing, but, there's a lot of risk and, they don't want to go all in right now. Maybe they're not sure it's for them. They want to sort of, litmus test it first. What could you give them in terms of advice just to get started?
Yeah, if they're looking to just kind of maybe touch it and not take on so much risk and to diversify that out, I would recommend like participating in a syndication or a REIT, real estate investment trust is my advice. And so you'd put that money in and it would buy maybe a large multifamily or a portfolio of single families. And you're risking that capital, but the chances of it actually not performing is less. And just make sure that whoever you're investing with is credible, right? They have a track record and they've done this before and they can prove that their other ones are cash flowing as well. So that's if they want to start with that, but also look at like ways they can minimize the risk. Look at properties like here's an example of property I bought a few years ago. We had a landlord that just was done with it. She never intended to be a landlord. And Chris and I bought it for $143,000 and we essentially took over the mortgage. We didn't put any money down. But the house was worth about $210. And so, but it needed updates. It needed some love. And she did not have good rates, like favorable terms on her mortgage. And so what our thought was, okay, we'll pick it up for 143 and we'll put money into it. We put about $30,000 into it. And then we refinanced it out and got good terms. Like she had mortgage insurance premium to pay for, and it just wouldn't cash flow if we kept it the way it was. And so now it cash flows like $600 a month, and we put no money down on it. Yeah, we had to put some remodel and rehab into it, but we already knew that it had an equity bring, so the risk was minimized. And obviously, as a property manager, the rental market. I knew the rentability of this house, the location, the rent rate that we should bring once we do a remodel and all that stuff. So you already have the knowledge, just leverage the sales and the investment knowledge on that. And you could really minimize your risks involved. And so we still have that property today and it's just cash flow and love.
It's almost like having cheat codes to a game, right? Because you understand the rental side. And so if you're not as savvy in the sales side, you could seek help or, as you mentioned, diversify rather than just purchasing one property, just a pool of properties.
Yeah, exactly.
What about, there are obviously nationwide companies that you can do stuff like that online with now. Are there any companies that you'd recommend, or would you steer clear of those?
I haven't done that myself. I think there's Realty Shares. I've heard good things about them, where you can buy a share of investment properties. I like the idea. I play around on Stash, which is an app, and it's I don't know if you've heard of Stash, but it's a stock trading app. And it's like, I could buy stocks for like 10 cents. It's just so stupid small. You know what I mean? I think I only have like $500 in there. But the point is like there are opportunities to really just minimize those risks. And the one thing I love about real estate beyond any other investment is that you're probably never going to see a $0 value asset because there's either insurance. So if it burned to the ground tomorrow, there's insurance to take care of that, right?
Yeah.
But stocks could go to zero. Right, the company can close their doors and they go to zero, or even turn into a penny stock, and you've lost your value. That's what I love about real estate. There's security in that. So, yeah, if you're looking at investing and to get into this, I think the easiest way is to diversify out and maybe do like a syndication or a REIT, or look for another investor in town and say, hey, you know what? I've got a little bit of money. You're an expert. Can I team up with you and put my money into this, and we can, split it however you decide, and just get your toes wet. There's a ton of ways to find mentors in this business, and there's a ton of good mentors out there that can really teach you the ropes and take those fears away. I know it's hard for a lot of people just to make that first deal. The first deal is always the hardest. But I think once you've done it and you find the right help to get you through it, it'll be a savvy way to live.
Can you think of instances or circumstances where a property manager should not invest themselves?
Yeah. The big one,
Like,
just
yes.
really like if you don't have the financial capabilities to support the home and provide a functioning, safe home for the tenant, don't invest. You can get yourself in a sticky situation there. I look at it like if you had a self-directed IRA, and typically you have to use cash to buy properties there, and say you had $100,000 to invest, you wouldn't want to go buy a $100,000 property because there's limitations to add more money to a self-directed IRA. So you would want to probably buy an $80,000 property and have some reserve in case something happens, And so, like, I would say that to any investor, look, you need to plan and have several $1,000s on the side just in case something happens. And if nothing happens, then use that cash flow to build that account, and then use that initial $6,000 reserve that you had to go buy more property.
Yeah.
So.
Good advice. I'm going to go buy investment property.
Yeah.
Now. I mean, obviously I will someday.
We can pool our resources
We should
together.
pool.
You should.
Yeah. Do you see, have you, I'm going to ask a little personal question now. Have you seen any bad experiences from people like getting involved with their siblings and buying investment property? I feel like that's kind of like a nightmare waiting to happen. My brother and sister are always like, let's invest in a cabin in Tahoe together and we can rent it out for most of the time. And then, go there a couple times a year. And I'm like, oh, I don't know. Sorry, you guys, if you're watching, but I'm like, I don't know if I want to do that with you guys. I don't think that's the right move.
I would just say be very selective on the partners you choose, regardless if it's family or not. When money gets involved, people make funny decisions.
Yeah.
And I don't know. I have a few partners that I'm comfortable with doing business with, but there are a select few. And my dad being one of them. I do business with my dad all day, any day. He is a very, very wise and level-headed person, but not everybody has that, that opportunity. So I would be very careful. Yeah. And beyond that, beyond being careful with it, make sure that you have an agreement that spells out how to proceed. So if something does come up, revert back to the agreement and make sure that you know how to move forward.
Yeah, that's good advice.
Like, do you recommend having an agreement notarized by notarized with a lawyer? And
yeah, so what I would recommend is just buy properties in limited liability companies or LLCs and have an operating agreement, and you refer to the operating agreement when needed. So
yeah, one good way to remove emotions and like, but you're the favorite. I get more.
I'll call you when I'm ready, Shawn, and you can give me a cheat sheet.
All right. Yeah, I'm willing to help anytime.
So I have another question. So for property management companies who, work with some investors, but they have not honed like their messaging or positioning to be the solution for investors. If they don't do, brokerage services, how can they position themselves? Because, right, if you do both sales and property management, it's kind of a no-brainer, like, oh, we help you buy more, sell, and then manage. But what if all you want to do is property management, but you want to work with investors? What can you do?
Yeah, so I think of a couple things. I would recommend like doing a I don't know what event planning, and maybe just do an investor gathering where you're just getting investors together. They're going to see you as, the startup of that and the leader of that, and just generally associate you with investors. So that's one way to go. I would say that just being a property management company is a really huge asset. I really like that because their focus is property management, and they get that realm of it. So, but just to be in a property management company doesn't mean that you can't have the the education and the wherewithal to make good financial investment decisions for your, with your clients. So, to position yourself as like, I know how to analyze deals. If we get a property that makes sense, I'm very comfortable with doing that. And it may be a slower process at first, but getting the message out there probably the biggest way to do that is start a gathering, like a monthly investor group or something like that. And that would probably be the fastest way to get there. Other ways is just building relationships with realtors that are investor minded. And if those realtors are investor minded, look, take them out to coffee, take them to dinner or whatever, and just say, look, here's my interest. I really like investing. I'm not a competitor to you. You're not a competitor to me, but I think we could throw business at each other. And I have that investor mindset, and I know you do too. And so when you have an investor that's looking for a rental property, help them buy it. But I would love to be able to analyze that deal too. That way, that person gets double the value, right? They're getting two people, or essentially three eyes to look at that deal and make sure it's going to cash flow for them.
Yeah, that makes a lot of sense.
I had another question.
Okay, go for it.
And so you mentioned something interesting. You said that if you just do property management and that's your expertise, there's no reason to not be able to get education out there to analyze these investment deals and position yourself as like, hey, I can actually show you like the future of this property. Yeah, but where would one get that kind of education? Like, is it a class? Do they have to join a group? Is there a certificate?
Do you get licensed? Do you have to get licensed, or do you watch some YouTube videos? I mean, sorry.
Probably a good start. Yeah. There is so much free content out there around investing in real estate specifically, that I don't think, that's what I love about our society, that there's so much information readily available and it's free. So like places I would go that I do spend a lot of time on is Bigger Pockets. Bigger Pockets is just a massive place for savvy investors. There's a lot of not savvy investors there too, but they're all there to help each other out. There's a lot of podcasts, real estate podcasts, and phenomenal ones that I would be searching out. But then find someone in your local market that's doing it and spend time with them, picking their brain. Don't be a leech though. Don't, want to go to lunch and then have them pay for it and crap like that. Don't be like that.
Don't like show up outside their house in the middle of the night.
Yeah, don't be creepy about it. But,
I want to learn about real estate.
I want to learn about this. Yeah, no, yeah. But yeah, I mean, approach them and try to find a place where you can create value for them. They'll probably be willing to expend their time and help you through it. That's how I would do it if I was starting over. So.
Okay. So we covered a lot of things right now, which I think is really great. I got a lot of good advice. Hopefully our listeners have too. If there's like one point that a property manager / investor should take away from this conversation, what would that be? Yeah,
the biggest thing is, I would say, stop thinking short term and think long term. Most of us are probably self-employed out there, or independent contractors, whatever. But to rely on a social security system that's debunked pretty much is silly to me. So take matters into your own hands, find ways to create your own wealth, and really understand the magic of compounding interest. And beyond all that, there are so many cool, like if you're crushing it as a real estate agent, there are so many cool tax liability or tax reduction capabilities that owning real estate has to reduce your tax liability. And so like if you're paying a bunch of taxes because you're crushing it at sales, owning rental property is a really good way to reduce that tax liability. That's where I'd go with that. think of ways. Oh, and you should look at the real estate professionals deduction out there if you're talk to your CPA about that, because it's big.
Wow. It's the first I've heard of it.
I know. It's the
We
first
should
time.
get it.
Nuggets, man. Golden
We should.
nuggets. There's one right there.
Yeah, I think one thing Maria and I really learned from this is that we should go get our license and just
That'll be our third job.
Yeah, that'll be our third job.
This is their first jobs are like our day jobs. This is our second job, the podcast.
Yeah.
Hosts, and then we can be.
Then we have our fourth job as cat wranglers.
Which pays no money.
Yeah,
it's a thankless job.
It is a thankless job. And for those of you who don't like cats, we like dogs as well here, and birds.
Don't discriminate.
We like all animals, creatures of the world. We like them all. Well, thank you, Shawn, so much. I hope to have you back in the future. There were a couple things that you said that really intrigued me, so we'll pick your brain about that sometime. But thank you so much for joining us. This was a really interesting talk, and we can't wait to share it with people.
Well, thank you for having me. It's my pleasure.
Yeah.
Thanks, ladies.
Yeah, thank you. And to all our listeners out there, say hi to Shawn and let us know if you have any topics you think that would be great to talk to him in the future about, or just questions you have, and we'll try to handle them on this show.
Thanks for listening.